Okay, so welcome after the break. We'll start, Ramai, with the very first unit in our grade 13 syllabus. So that is unit number 7, money and banking. So I'll start off with talking a little bit about how much of questions you all get and how the unit is about. So talking of this unit itself, from this unit in your A-level paper, you get question number 6. So if you look at your A-level paper, paper 2, question number 6 is from unit number 7, money and banking. That is a entire 20-mark question. In addition to this, you roughly get around 4 to 5 MCQs, roughly around 5, I would say. Okay, from unit number 6, you roughly get around MCQs, you get around 5 MCQs. So what does that mean? You're looking at 10 marks there. So in total, out of your 200 mark paper, we are going to focus on getting this 30 marks. That is what you get from unit number 7, money and bank. So I know none of you all have the printed tute yet. Those who have paid the fee, you all will get your tute by not before, even for December. I sent you all the tutes, Lamai. You all should get your tutes by tomorrow or day after. So you would see. Guess anyone recognizes this guy? Who is this fellow? Is it a mere cartoon or does it represent someone? Who is this guy? Former what? Former central bank governor, no? Former central bank governor who? Looks a little like Basil also, right? This is former central bank governor Cabral, no? It's a cartoon. It's not a cartoon that I made. It was a cartoon made by some person in a newspaper. I used it to my cover page. I will explain the meaning behind this what cartoon also, how the central bank printed money and how that increased inflation. Remember last year prices and all went very high. So we'll talk about reasons for that and all. Okay, very interesting stories. We'll come to those. So coming into this part, Lamai. So we have around 30 marks that we get. So how is this unit divided? It's always important to learn how to divide the unit. Only then it's easy to study. So the first part of this unit is about money. Okay. First part of this unit is about money. First, we have the very basics. That is where we will start today. So what are the features of money, functions of money, the types of money, those very basics is what we will talk first. Then there is the other part on demand for money. Demand for money. What is demand for money? That's another part we will focus on. We will probably touch it today as well. Then there is money supply. So we have supply of money, demand for money and supply of money. That's another part. So this main part is there. And then after that, Lavai, the next part of this unit is on inflation. What is inflation? Where prices are rising. So there we will talk about what are the causes of inflation, certain theories behind it, types of inflation. We'll talk about that. That's the next part. Then the next part of this unit is about the central bank. It's about the financial system. So if you take a country, Lamai, there is a financial system. No? There are financial institutions, banks, finance companies. There are financial instruments, treasury bills, treasury bonds, shares. There are financial, there is a central bank. We'll talk a little bit about those. Then after that, what we will do is we will go through a little bit in detail about the central bank. So how does the central bank work? What are their objectives? And especially under the central bank, we will talk about something called the monetary policy. So monetary policy is about a country's interest rate, money supply, how to control those. We talk about that. Then after talking about the central bank, at the last part of this unit, we talk about commercial banks. So under commercial banks, we will talk about what are the commercial banks' objectives, how do they operate, and then there is another part called credit creation. That's also a very important part. So overall, if you take this unit, Lamai, it's a bit of a big unit. It's not like a very small unit. It's a bit of a big unit. Even if you get the tute, you all will see it's a 50-page tute. So it's a little bit of a bigger unit. So these are the main areas. Now, why did I focus on the areas? Because when you all are studying, this is how you should break down and study. So when you are studying unit number 7, okay. So day 1, you study money. Okay. Yes. There are calculations also in. Okay. Day 2, inflation. Day 3, okay, financial system. Day 4, I study about the central bank. Day 5, commercial bank. That's how you break it down. Follow that strategy for every unit, Lama. Because otherwise, when you look at the whole syllabus and see more 12 units, you will never feel like studying. Take one unit, break it to small parts, one day, one part. So today, I study money. Then that way, in 5 days, you have completed the unit. So always, every unit, follow this strategy. Okay? Right. So now what are we going to focus on now? From all these parts, we will start with the money part. This is the first part of this unit. Whole thing is there. I have shared the PDF of this also. I didn't share the PDF of the entire tute. I just shared the PDF of this first part. This first part PDF is there in the, I remember in the caption. Did you all open it? No? I don't know if you all saw. In the flyer, in the caption, there was Unit 7 tute. Yes, did you all open and check? If someone has downloaded the PDF, can you all send that on the group? I don't know if you can text on the group. If you can you just send it on the group? If that, okay, that is only the money part. Okay, the rest of thing is not there. Okay, then we'll start. Now I want all of you all, Lamai, to be active and give me some answers. Okay? We'll start with what is money and what are the characteristics of good money. So what is money, Lamai? We say money is anything that is accepted as a means of payment. In return for something, you can always give money. Now, in return for this class, you all pay me a class fee. So, what is money? Money is anything that is accepted as a means of payment. Yes, you can use it to buy capital. Correct. Then, what are the characteristics of good money? You see, number 1, general acceptance. Now, if you take money and go, no one will reject money, no? If you give money to someone in return for a good, if you give money, they will take it. Now, credit cards, sometimes they might say, no, sir, we don't take credit cards. Now, can you go to, let's say, Cargill's and give a check? No, they will say, no, sir, we don't take checks. So, certain things don't get taken. But if you take money, you take notes and coins, everyone will accept, no? That's why we say general acceptance. And then second can be durability. Because have you all realized how many of you all have found, right? Now inside your clothes, after let's say washed clothes, after around maybe 2-3 weeks, you put your hand and see you get money. Have you all experienced that? In your washed clothes, not in your new clothes, in your washed clothes, after around 2-3 weeks. Why someone else sharing the screen? Yes, can you give me 1 second? Why is there a meme on my screen? Oops, hold on. Give me a second. Yes, can you all not play around so that I can do my class properly? If it happens again, I will remove the fellow off. Right. So second line is durability. Have you all realized there are if you take money, right? Sometimes after 2-3 weeks, you put your hand in your pocket and see under there is some money. But has that money got torn and is it in an unusable state? Is it in like a very unusable state? Don't you think you can still roll it up and still use, right? But what happens to a normal piece of paper? If you take a normal piece of paper, that is different. Have you all seen a piece of paper inside your clothes? When you take it around 2-3 weeks later after it has gone in the washing machine, you can't do anything. No, it's rolled up, there's a white piece of paper. But money, not the case. So when you print money, right? When you print money in terms of even notes, you all realize that it's a different type of material neither. That's why we say money is durable. It's not a normal like your A4 sheet paper. So it's a durable piece of paper. That's why we say it's durability. And then uniformity. What is uniformity? Looks the same, right? You'll take a 20 rupee note. All the 20 rupee notes look the same. You don't have 10 different kinds of 20 rupee notes, 10 different kinds of 1,000 rupee notes. No, it all looks the same, uniformity. Then there is divisibility. What is divisibility? Not that money won't depreciate. You can say money is durable. Okay. Divisibility. What is divisibility? You can pay any amount, no? With your money, you can pay any small amount. Let's say 5,876 rupees and 50 cents. There is enough notes and coins in the country that is able to pay that. Any small amount you can pay, divisible. And then portable. What does portable mean? You can easily carry it around, no? If you take money, those are small pieces of paper. You can put it in your purse or your pocket or inside the behind your back cover of your phone. You can easily carry it around, portable. And then stability of value. 1,000 rupees yesterday is the same 1,000 rupees today. The value is the same. Then legal validity. So money lamai, anyone can't reject. If someone comes and gives money for something, now something like credit cards, people can reject. Now that is why now have you all seen now in Uber or PickMe, when you all go card payment, they don't take, they say back. But if you give money, no one can reject lama. You can even go and file a complaint against it. It's legally valid. And then difficult to counterfeit. Yes, can you all tell me what is the most difficult currency to counterfeit? Which note in the world? Most difficult currency to counterfeit. So you all have seen each currency has these security features, no? If you take our note, if you hold it to the light and see under there is like a small symbol, there is a unique identification number, there is a like a strip going in the middle. There are so many, right? So why is that there? To avoid it being counterfeited. No, avoid what is counterfeit? Creating duplicates. So which one is the most difficult one? The most difficult currency to counterfeit is the $100, $100 note. This is the most difficult. This has certain security features that no one even knows. So then you counterfeit means making a fake one. You can't make, it's not easy to make fake money. You can't print it on a printer. No? So the most difficult one to this thing, yes, is the $100. Yes, printers and scanners, yes, they can do that. Okay? The most difficult one is the $100 note. Very difficult to counterfeit. There are security features that it's not even revealed to the public. So people don't even know what kind of security features are there. Now in the rupee and all, we know no, Sri Lankan rupee notes and all, you hold it to the light, you can see what is there. You can see those. No? But if you take the US dollar, there are features no one even knows. So counterfeiting that is very, very hard. And finally, easy identification. I'll give you a good example. Have you all seen Lamai? Even small kids, they can identify money. Haven't you all realized? Even small kids, you can't play the fool with them. Even a 3 or 4-year kid, right? He knows the difference between money and a piece of paper. You can't fool the fellow by giving him a piece of paper. He knows that's not money. Have you all realized that? Even the smallest of fellows, right? maybe 3 years, 4 years. Even they can identify when they see, they can see money. So that's what we say, easy identification. So this is not a very difficult area. That's why I went faster. These are what? These are characteristics seen in good money. So any good currency will have these characteristics. Sometimes now in your A-level paper, I will show you some past papers. There are some A-level past papers, right? 4 marks, okay, 4 marks. They ask you, what are the characteristics of good money? You know what you should write? You should write 4 of this. Shall I show you one past paper? Do I have the past papers? Yeah, right? So look at this, if I'm not mistaken, 20. The past paper tute you all will get with your revision tutes. Okay, this tute, all the A-level past papers unit wise. Mm, Characteristics of good money. I can't find the question. Money, double coincidence. Can't find that question, but it's there somewhere. If I find it, I will let you know. Here, functions of money. That is the next part that we will learn. I can't find that easy question. I think it's an older one, not 2000 here. Hold on, where is my tute? Okay, so coming back to my tute now, right? There are sometimes I don't think it will come in your year, but sometimes very easy questions asking what are the characteristics. So you'll just have to write around 4 of them. Is that part okay? Guys, characteristics of good money. Safe near the very easy part. Acceptance, durability, uniformity. But don't worry about that much. Don't overthink it all. Now, this is a highly tested area. The functions of money. I know some of y'all would have learned this in business study, but we'll go a little bit in detail. Okay? Yes. One function of money is that it acts as a medium of exchange. What does that mean? That means when exchanging goods and services, when buying goods and services, you can pay with money. If money acts as an intermediary when exchanging goods and services. So whenever you are buying something, in return you can give money. That is what we say. It is a medium of exchange. Money acts as a medium of exchange. Or you can say, Lamai, money functions as a medium of exchange. Then guys, how many of you all know this story? How did money facilitate division of labor and specialization? How many of you all remember this story? I would have gone through a little bit in unit number 1. You all know this story? How money helped with division of labor and specialization? It's a question that even came up in past paper. Yes, before money came in, I want all of you all to give me an answer. How did trade happen? Before money. Before there was money, there was what system? Before money, there was something called what system? There was something called the barter system. What is barter system? Exchanging goods for goods, no? So before even money came, there was something called the barter system. They were exchanging goods for goods. But this barter system, Namai, had a lot of problems, right? Can you all give me some problems in the barter system? So many problems were there when exchanging goods for goods. There were storage problems, right? You store and keep on thing gets this thing. The lack of double coincidence of bonds. It's very difficult to find double coincidence of bonds. Problems in divisibility. Measurement problems were there. Transport, so much of problems, no? So because of that, Lamai, did people specialize? What did people do? It's very hard to exchange. So why is different people sharing screen? It's very hard to exchange. Give me 1 second. Okay. So back to my story. So if you take the barter system now has a lot of shortcomings, no? So much of shortcomings, divisibility problems, double coincidence issues, right? So many things. So because of that, did people specialize? Did people specialize, Lama? Did they specialize on one good? Let's say, for example, did one person specialize on doing one thing? Let's say growing vegetables, or one person sewing clothes. Did they specialize? They didn't. Why? Because it's very hard to exchange. No? Now, let's say if I specialize in making clothes, then I have to now do what? Double coins, about those problems all are there. No? So very hard to exchange my clothes and get other stuff. So what I will try to do is I will try to make a little clothes. I'll try to grow my own vegetables. I'll try to, do a little bit of housework also. I'll try to do everything. There was no specialization. Why? Because of the problem of double coincidence of wants and everything else. People didn't want to do what? People didn't want to specialize. So then, Lamai, what happened? In order to solve these problems, now money was introduced. Because so much of problems, people never specialized, right? Now, when money was introduced, all the problems were solved. Everything was sorted. Now, no issue at all. All the problems were solved. You can easily exchange goods. You don't need double coincidence of bonds. You don't need any of that. So then what happened? Then, because of the introduction of money, now what did people start to do? People started to specialize. Money acted as what? Money eliminated the problem. So money became the medium of exchange. So now people started to specialize. So let's say now if I am good at making shirts, I will put all my effort and make shirts. I will try to sell as much as possible shirts and I will get that money and use it for something else. Because now no problem. Now early only it was very hard to sell my shirt in barter system. If I only made shirts, very hard. Divisibility issues, portability, right, transporting, all problem. But now when money came, no problem. I will make as much as possible shirts I can. And what will I do? I will sell it to people, get the money, do whatever I want. So because of money, what happened? Exchange became easy. So people started to do what? People started to specialize. The moment people started to specialize, then what happened? Then large scale production started. Now, I am a person who is good at making clothes. Now I start a clothes factory. So when people started to specialize, what happens? There is large scale production. Along with large scale production, what do we see? Along with large scale production, now what happens? Think of a large cloth manufacturing company. What will they have? They will have division of labor. No? They will divide the process into small parts. So that is how money facilitated specialization and division of labor. Remember it like a story. Earlier, I'm repeating, summarizing, there was barter system. In this barter system, what happened? In this barter system, it was very hard to uh, exchange, so many problems. So because of that, specialization was discouraged. No one liked to specialize and do things because very hard to exchange. Then to solve these problems, money came in. The moment money came in, everything became easy. It is now easy to exchange goods and services. As a result, people started to specialize. Large scale production started and division of labor was practiced. That is how money facilitated division of labor and specialization. Because money came in as a medium of exchange, it solved a lot of problems even in the barter system. Is that okay? Fine. Medium of exchange and that story. Can you quickly let me know? Yes, others also. Okay. Then now I'm going to the next one. The next one is act as a store of wealth, or you can say store of value. Okay. What is this? We say money functions as a store of wealth or store of value. What does it mean, Lavan? This means now because of money, you can save, no? You can, yes, it's a little similar to money and banking in BS, but it goes much more advanced than. You will wish that it was the BS way. Okay, so you use it. What does it mean? Yes, millionaire stuff. So you can hear the use of money to store value for future needs. Use of money to store value for future needs without any risk and difficulty. Without any risk and difficulty is known as the store of wealth. So you can store money and keep, right? You can store it and keep to use later. That's what you call store of wealth or store of value. You can keep money, you can save money, you can set aside some money and keep to use later. You don't have to worry about that money getting damaged or that money getting this thing. No. Now, that was not the case with goods, no, Lamai. Now, when you store goods and keep, goods can get rotten, expired, right? Something can happen, but nothing like that with money. You can store money and keep, you put in your almirah and keep even 1 year, no problem. Your money will still be there. That's why we say it acts as a store of wealth. And also, Lamai, why do people like to uh, uh, keep money as a store of wealth? Because of what reason? Because of perfect liquidity, no? Because money is perfectly liquid. What does that mean? Money is already in the form of cash. So there is nothing that you can need to do. If you want, soon you take your money, you can go and spend. That is that part. Is that okay? Store of value? Check. You can save money and keep. That's a very basic story. Now, then Lamai, another function is money functions as what? Money functions as a unit of account. What is this? Unit of account. With money, you can measure the value of something. Now, just think, Lamai, how now? Okay, let's take the iPhone. How do you say now? How do you give a number to it? Money, right? You say this iPhone is worth 300,000. My laptop is worth 200,000. So how do you give a value to that? Because of money. Just think, okay, just think if there was no money, there was nothing called money. How can you give the value to something? How can you measure something? No way. See, that's what we say. Here, money also functions as a unit of account. What does that mean? It provides a common measure of value of goods and services. Because only because of that, Lamai, you can make decisions, no? So knowing the value or price of a good in terms of money enables the supplier and the purchaser to make better decisions. And now even just think, even something like financial statements, you can only make because of what? Because there is something called money. Because from money, you can measure stuff. You can measure how much is your sales, how much is your purchase, how much is your rent, how much is your profit. If there was nothing like money, there is no financial statement. There is no nothing called a GDP of a country also. So all of that is not there. That's what the unit of account means. What is unit of account? You can measure the value of something using money. You can say, okay, this theory class is worth 2,500 rupees. Our theory and revision class is worth 4,500 rupees. Why? Because there is something called money. If there is no money, you can't give a value to anything. And then finally, we have act as a standard of deferred payment. What is that? Because of money, now what can you do? You can purchase something now and pay on a future date. Now, even now, some of you all, you see, now some of you all now for this class, you have not paid, but you are still coming. You will say, sir, I will pay the class fees next week. Perfectly fine. You're coming to the class, but you're paying the fees the next week. So ability to settle past debts at a future date. You can borrow, you can lend, you can buy on credit. Because of what? Because of the fact that there is money. So that is what? acting as a standard of deferred payment. What does the word deferred mean, Lamai? Deferred means delayed. You're deferring your payment. You're delaying your payment. So because of money, you're able to do. So those are the 4 functions. Very simple. Now I didn't go into detail, Lamai, because you all learned this in business studies also. O levels also you all would have learned. So what are the 4 functions once again? First one, acts as a medium of exchange. Second, acts as a store of wealth or store of value. Third, acts as a unit of account. And last one, acts as a standard of deferred payment. Is that fine? Yep. Questions, problems? Those who do what? Please don't worry too much, guys. Just have a read. It's very simple. Don't worry at all. Okay. Now, then Lamai, we'll come to this. I'll do this part and I'll give you a small break before I get to, if we have time, before we get to demand. Yes, we have a small quiz today as well. Okay. I just realized I only made the quiz for 40 participants. We'll see. Okay, there is a quiz at the end of the class, depending on what we learn. Okay. Okay. So just summarizing deferred payment again. Deferred payment means because of money, you can buy now and pay later. That is what deferred payment means. You can settle current things in the future. So class will finish at 10. Okay. Now, then guys, coming into this, the types of money. There are several types. So listen now, all of this at the end of this class, there is a quiz. Also, just want to check. Did you all get your term exam marks? I couldn't make a flyer or anything. Yes, however, your marks, I saw some of you all have done really, really well. The unit 1 to 5 term exams. Didn't get your marks? Not yet. Your papers were marked last week. I told the admin to send. I'll remind the admin again in case you have they have not got. Okay, just remind me. I will remind that. Some of you all have got, no? Some of you all got, some of you all did. I'm talking about my term exam, not your school term exam. You get the unit 1 to 5 test that you all did last month? Did anyone get that mark? No? All right. Your papers are marked. I think I sent the admin last week to send it. I'll ask them to send. Some of you all have done well. I think the highest, there were 2 students with 90. Yeah, I'll ask them to send. Most of you have done well. There were people in the 20s also, which all will have to work a little harder. I'll ask them. Okay. Right. Then coming into this, the types of money. So yes, there are a few types of money, very easy again. One type of money is currency. What is currency? Currency are the notes and coins. No, notes and coins. That is what you call currency. The coins and notes issued by a financial authority. So in Sri Lanka, it's the central bank. Central bank is the one issuing notes and coins. Then also we say, Lamai, these are legally valid for any transaction. No one can say no. Okay. No one can say no for money. Now, let's say you all come and say, sir, can I pay my class fees with check? I will say, no, Puta, sorry, can't pay with check. You have to pay by this. You come and say, sir, can I pay by card? Sometimes I can say no. But if you come and say, sir, shall I pay cash? I can't reject. I can't say, no, can you transfer it to my bank without giving me money? You can't. So any money, Lamai, they are legally valid. It's legally valid. I'll give you a good this thing. Now, I remember when I was going for classes, right? I went to classes, A levels, I went to Sigma. Anyone go Sigma? I don't know. So I'll go to Sigma. I went to Sigma. So once there was a small fight that happened between the Sigma fees collecting guy and a girl in a student, right? A student who was a girl. So what did this girl do next week when paying the fees? Okay, she bought, I think the fees was around 3,000 or 4,000. I can't remember the exact amount. Now, usually on the first day of the week, big queues to pay the fees and all in physical institutes. I don't know if you all go to, there are big queues. So sometimes it takes around half an hour. You have to stay in the queue and one by one to pay the fees and go. Okay. So what this girl did is she bought coins and came to pay the fee. Around, I think, 4,000 or 5,000 rupees, everything in coin. 1 rupee, 2 rupee, 5 rupee, 10 rupee, everything in coin. It's because why? Before week, someone has pissed her off. So she bought the entire thing in coins and in a bag, she gave it to these. Now these people got even fired. But can they reject it? No, legally they can't. They was holding the person saying, how can you bring cash like this, right? We want notes, this and that, but they can't take any action. Legally, what she has done is completely correct. That's why we say it's legally valid. So even coins, cents and all, there are certain amounts that you can pay, but starting from 1 rupee, you can pay any amount. Starting from 1 rupee, you can pay any amount of money. So even if you want to pay 100,000, you can pay 100,000 in 1 rupee coin. No problem. It's legally. So you can have that in mind. Next time someone annoys you or pisses you off, you can go and pay them in coin. If you have to pay them some money, if you have taken a loan and the fellow annoys you, go and pay the fellow in coins. You can do that, right? That is currency. Then there is also bank money. What is bank money? We say bank money is the money that people have in current accounts. Remember, how many of you all know demand deposits, like current accounts? Not savings accounts, current accounts, which we also call demand deposits. Have you all heard about this? But I think for O levels also you all would have studied, no? What is the special feature of current accounts? Current accounts, with current accounts, what can you do? What's the special thing compared to other accounts? With current accounts, what is the special thing, Lamai? You all can draw checks, you can issue checks. Now, for your savings account, can you issue a check? Now, you all might have a savings account, no? Your children's savings account. Did you all convert your children's savings account to a normal account? No? Have you all converted that? By now, you all are 18, 19, right? But from around 16, you can. You might have had like a children's savings account when you all were born. You would have converted, right? Now, with that savings account, Lamai, you can't write checks. So you can draw checks with what? You can draw checks with your current account. So current account are usually used by businessmen, firms, they use. Sometimes maybe your father might have a current account. So maybe if you would have seen a checkbook at home, that is a father's current account. This usually savings account name a checkbook. So whatever money that is there in demand deposits or current account, that is what we call bank money. Now, for these current accounts, does the bank pay interest? These accounts that you can, current account is account where you can withdraw checks, where you can draw checks. That's what you call a current account. Does the bank pay interest for this? No, there is no interest. So no interest also for savings account. Interest bank money, there is no interest. For current accounts or demand deposits, even if you have 100 million in your bank account, you don't get any interest in it. It's just money that is there, highly liquid. Liquid means easily you can convert to cash. You can easily write a check and give. You can do anything you want. No restriction at all. That is bank money. Then, Lamai, what is near money? What is near money? Yes, near money is the money that you have here. The money that you have in fixed deposits, money that you might have in, you all also have a children's savings account that you converted. Those savings deposits, then treasury bills, treasury bonds, exchange bills, promissory notes. You don't have to know each one of these, don't worry. So all of those are what you call near money. Why is it called near money? Because, Lamai, you can eat, no, checks don't come under this now. Checks don't come under. Checks is a part of demand deposit. Okay. Gold also, no, gold is not near money. This is the money that you can easily convert into cash. Now, your savings account balance, Lamai, if you all want, tomorrow you can go to your ATM and put the ATM card, Tangala, you took some money, no? You can easily convert that money into cash. So that's what you call near money. highly liquid assets which acts as a store of value but does not act as a medium of exchange. Now, can you go to Cargill's and say, I will pay with my fixed deposit? Can't. So near money doesn't act as a medium of exchange. You can't go to Cargill's and say, I am paying with my fixed deposit. But it acts as what? It acts as a store of value. You can't do transactions with your fixed deposit. You can save money and keep in your fixed deposit, right? That is near money. But near money, we say, can easily be converted to cash. So far we learned three types. One is currency. What is currency? Notes and coins. Second is bank money. For bank money, we only consider demand deposits. We don't put savings deposits into that because savings deposits also savings deposits are different from current accounts. Checks you can't there is interest on it. That's considered as near money. So only demand deposits or current accounts we consider as bank money. Then remaining the rest of the assets, treasury bills, savings deposits, fixed deposits, where do we put? We put it under the category near money. Very simple things. Are those three okay, Laman? Fine. Good money and current state? Not really. There's nothing called good money. Neither. Very easy ones are this. I'm going a little fast, okay? It's very boring for me to teach this also. Because some of you all already know this. The demand for money part is interesting. I'll teach you all that. That's very interesting. That's more econ and more logical. These are like this is like me teaching business studies. I hate teaching business studies. Okay. So then next one. Money substitutes. What are money substitutes? Money substitutes are here instruments which act as a temporary medium of exchange. Acts as a temporary medium of exchange and does not act as a store of value. Will come. Bitcoins and all will come, right? So what are these money substitutes? Things like monada, things like credit cards and debit cards. Credit cards, debit cards are considered as what? Money substitute. So I'm hoping you all know. Yes, you all know the difference between a credit and a debit card? Yes. General knowledge over. You don't have to learn it on this thing. Yes or no? Know the difference between a credit and a debit card? So, okay, tell me. Credit card, are you using your own money or are you borrowing? Credit cards, are you using your own money or are you borrowing money from a bank whenever you swipe the credit card? So credit card is you're not using your own money, no. Credit card is you're borrowing. Now, the bank will give you a limit. Bank will say, okay, look here, Arshad, your credit card limit is 50,000. So for a month, I can keep on swiping my card for 50,000. End of the month, I have to pay. Whatever I spend, I have to pay. That's like a short-term loan. Debit card. Are you borrowing money in a debit card? But no, but debit card is your own money. Whatever the money that is there in your bank account, maybe your savings account, your demand deposit, or whatever that is in your account only you're using. That's a debit card. I'm hoping you all know that this is very basics, okay? So that's debit cards and credit cards. Both of those are what? Both of those are considered as money substitutes. Substitutes for money. Okay? Now, then now this part I will skip it for now because I have not taught you all money supply yet. There are two interesting areas on why are credit cards not considered money and why are credit cards taken into account while debit cards are not when determining money supply? So see, so far I have not taught you all money supply. Remember I told you in the first page. So you need to know this money supply here, this part. You need to know this part to understand that. Since we have not done it, I will skip it from that part and I will come back. Okay. Debit cards only can be used anywhere. Anywhere also, no, not some places don't take debit cards. That's also there. So you can't say debit cards can be used anywhere. Okay. So this part I will skip. Can you all please remind me to come to this after I do money supply? Can you all make a note and please remind me so that I don't forget this part. Okay. Then the last one, Lamai, is this electronic or digital money. Electronic or digital money. You see, we say this is the money stored with the use of an electronic system. With the use of an electronic system. So you can make transactions with this now. You see, have you all, yes, how many of you all are aware of something called bitcoins or let's say cryptocurrencies? Do you all know cryptocurrency? Yes. Have you at least heard of something like that? Yes, cryptocurrency. No. Not even heard. Would have heard, right? So these are called digital currencies. So you can buy these, right? Even I am at one point I also invested, made a loss also. You can try it. Maybe after A levels, learn about it. It's a very interesting thing. You can invest in this, right? It's like the share market. You can buy bitcoins. Now, for example, I'll give you a good thing. Around 6-7 months ago, one Bitcoin was around $15,000. Around 6-7 months ago. Now, one Bitcoin right now, it's trading at around $45,000. So when you're buying now, you don't have to buy one complete Bitcoin. So this is one Bitcoin. One, we say BTC, with one Bitcoin, you don't have to buy one Bitcoin. So let's say you bought, you invested $1,000. So $1,000 means you would have got 1/15 of a Bitcoin. So in 6 months, how much would have that been? 15,000 became 45,000 means your 1,000 would have made 3,000. You would have got a 200% profit in just 6 months. Not that it's illegal in Sri Lanka. It's central bank doesn't talk about it much. They don't completely ban it also. But they don't encourage it much also. They say you do on your own. We are not going to help. You can. There is this. Losses also happen now when the price comes down. Now I'll tell you around last year, not last, I think in 2022, right? In 2022, at one point, one Bitcoin was $69,000. Okay, I'll just show you the Bitcoin price. On you should have the Bitcoin to USD. See, right now, today one is 42,000. Okay, so if you look at the chart, this is the 6 month. Look at the 5-year chart. Not very clear, no? I think Coinbase has a better chart. They have a chart. No chart. No. Okay, we'll look at the normal chart in Google. You see now, one Bitcoin. Look at this. Where was the Bitcoin price the highest? Somewhere around here at this point. Here, here, 64,000. It was highest, if I'm not mistaken, was around 69,000. So this is somewhere around November 2021, and since then it crashed. Lama. It went down. Prices went down. It went down. At one point, it was at around here 16,000, 15,000. I told you. This is December 2022. So December 2022 is around 1 year before, and then now it is at around 40,000. So these are highly volatile. So the objective is to buy at a low price, sell at a high price. That's how you make a profit. You buy it at a low price, you sell it at a high. So now, if you look at the 1 day chart, see, if you look at the Bitcoin today, here it has fallen by $2,000. Yeah, they're saying minus 2,500. Can you see that? So that means yesterday the Bitcoin was around 44,000. Now it has become 42,000. So that's a loss. If anyone bought it yesterday, you don't have to sell it today. If you keep it, it's okay. So you have to wait until it goes up again. So you can buy it at one price and you wait until it goes up again. You make a profit. That's how Bitcoin works. For Bitcoin, there are not just Bitcoin. There are thousands of other cryptocurrencies. So Good thing to learn maybe after A level. Don't put a lot of money and invest. You don't even have to invest money to you don't even have to invest money to learn. But after A levels, if you'll have nothing much really to do, you can do it. Yes, not one time person. You can trade daily also. Now, at one point, I remember I was trading daily also. I buy in the morning. If the price goes up in the evening, I make a profit. I sell it off. You don't have to wait for a long time as well. So let's say in the morning I buy it 40,000. It goes to 40,500. I make a 500 rupee profit. Something like that. So you quickly can do a lot of trade skills. So it's good thing to learn, but be very careful. There are so many scams. Don't get caught. There will be scams that says, give your money to us. We will invest it in the Bitcoin and give you the profit back. Those are all scams. They will take your money and they'll never. Please don't get caught to any of those nonsense. After you just learn, watch a few YouTube videos, how it works, right? Try it out, but be very careful when investing money. There are so many scams out there, and even if you're scammed, there is no way you can go and complain because these are not very central bank approved stuff. So you go and complain, no one will even care. They will say central bank will say we told you not to do this. The central bank has not made it illegal also. They have not made it legal laws. Central bank is just waiting. If you do, you do. We won't take the risk. So if you get something into some trouble, you lose money or something, they won't take any action. They are not going to find the people for you or take any action. Not going to happen. Good to learn though. Okay. Now, those are what we call electronic or digital money. Now, apart from Bitcoins, you all have seen in Sri Lanka, we have Easy Cash, M-Cash. Those are all electronic or digital money. So that's the different types of money. Is that part okay, guys? Very easy, neither. So what did we learn? Characteristics of money, functions of money, and then types of money. 3 small parts. Those are the basics. So with that, what happens? This first part is done. So when you all are studying, always look at the bigger picture. So in this basics, what did I have? I had the characteristics, I had the functions, I had the types. Do I know this? Yes. Basic part done. Then you go to the next part of the unit. What is the next part? Demand for money. That's a very interesting one. Now this part is very boring. You all know this in business studies. You all have learned. Shall we take a small 5-minute break to walk around, get some water? I'll go until 10. There is a small quiz also, okay, at the end of this class. From what we learned today, there is a small quiz. Shall we take a break till now it's 9:26, 9:30, 4 minutes. Gala walk around and get some water and come. 9:30 to 10, we will do this demand for money and we'll call it a day. So walk around, get some water and okay, right. So starting with Lamai, demand for money. How does demand for money work and what is it about? Now, this is where we get into the interesting part. So far, all these business studies were very theory. Okay. Now, this one, Lamai, I want you all to understand logically, where we'll try to understand it with, this is why it happened. Okay. So, what is demand for money? Yes, demand for money is the preference of people to keep money with them in the form of money itself. What is that? The preference for people to keep money with them in the form of money itself, or in other words, in the form of cash. How much of money people are willing to keep with them in the form of cash? Now, some of your money, you all put in the bank. You put in the bank, you buy a land and keep, you buy gold and keep. Not those. How much of money you're willing to keep with you in the form of cash? That is what you call demand for money. Or in other words, we call it liquidity preference. So once again, the preference of people to keep money in the form of money itself. Preference of people to keep money in the form of money itself is called what? Is known as demand for money. Then can you all tell me, Lamai, why do people keep money with them? Can you all tell me why do you all keep money with you? Hmm? Why do you all keep money with you? Why don't you put all your money in a bank or in buy some gold, or why do you put? Okay, you keep some money with you for some emergency purpose. Right, correct. That is the precautionary motive. You keep your money with you for your day-to-day needs, no? For your transport, to buy food, to pay class fees, you keep money. That is the transaction motive. We will go through these in detail. Then some of this money you will keep for investment purpose to make like a profit, and those are speculative mode. So repeating for those who joined late after the break, what is demand for money? Demand for money is the amount of money people keep with them in the form of money itself, not the money you put in the bank or the buy gold and keep. The money that you keep in the form of money, in the form of currency, in your purse or inside your almara or in your pocket or wherever, the money that you keep with you in the form of money itself. That is what you call demand for money. Then why do people demand for money? Why do people keep money in the form of money itself? Three reasons. One is for their day-to-day transaction. ඕනේ නේ බස් එකේ යන්න, කෑම එකක් ගන්න, to buy some food, go in the bus, you need some money. Transaction. You need some money for precaution, some safety, emergency. Okay, and you need some money for speculative purpose. So we'll go one by one. We'll go to the transaction mode. Why do people keep money with them? Due to the transaction mode. Yes. Do you all realize there is a gap between when people receive their income and when expenditure is made? When do usually people receive income? Do they receive income every single day? Every day do they earn money? Normal person. Every day do they earn money? When do you get your salary? Usually salary, we're not talking about daily wage. Usually salary at the end of the month. So on one day of the month only, let's say end of the month, you get your salary. Okay, end of the month you get your salary. So your income comes at the end of the month. What about your expenses? Does all the expenses come on the same day at the end of the month? Expenses daily, no, everyday expense, no. Today you have to pay this, tomorrow this, under that, right? Daily you have expenses. So there is a product mismatch there neither. Your money is coming only at the end of the month. Expenses are happening daily. So that means you have to keep some money with you daily, right? From your income. Let's say at the end of the month, if you got 100,000, and you have to keep some money with you daily. Why? Everyday expenses. Hamadama, something is there. Then shall I ask you something? Yes. Now let's say, okay, how much do you have in your purse for your day-to-day expenses? How much do your parents give you? Let's say you're going to school. How much do they give you? I got, when I was going to school, if there is food, I got 50. I don't know. I don't think I got 50 also. For St. Thomas, I walked 10 minutes. Some days, no money also. Sometimes I got around 50 rupees. How much do you all get now? 100? More? 200? That is your day-to-day expenses. Okay, now that is your demand for money. So this is you. Your demand for money is 200 rupees a day. Right? Now in your purse, you have 200 rupees. Now in my purse, I have 5,000 rupees. Why? What do you think the reason is? Why are you only keeping 200 rupees and how come I am keeping 5,000? Why? How come my demand for money is more? How come I am demanding more money than you? I am keeping 5,000 rupees in my purse, you are keeping only 200. What reason? Main reason is what? I am earning more than you know. You are depending on your parents. I am doing my class and I am earning more money. So Demand for money for the transaction motive depends on what? Depends on your income. Someone who is very poor, think of a very poor person. He will only keep 50 rupees with him for his day-to-day expense. You're keeping 200 rupees with you for your day-to-day expense. I don't keep 5,000, I'm just saying. Let's say me, I am keeping 5,000 rupees with me with my day-to-day expense. So demand for money for the transaction motive depends on what? Depends on your income. So when your income increases, what happens to your demand for money under the transaction motive? What happens? When your income increase, when you're someone who is earning like around 500,000, 1 million, your demand for money under transaction motive increases. You keep more money with you. Poor fellow has only 50 rupees in the purse. You earn 1 million means you will keep around 10,000, 20,000 in your purse. Demand for money for transaction motive increases. So look at how the diagram curve looks like. You see, on this axis you have demand for money. This axis you have income. Income and demand for money. What type of relationship? Demand for money under transaction motive and income, positive relationship. No? When your income is very low, see, if you're earning, let's say, only 10,000 rupees a month, you are only keeping 1,000 rupees in your purse. If you're earning, let's say, 1 million a month, right? Your income is 1 million a month, and in your purse now, you might have, let's say, 20,000 rupees. See, when your income increases, demand for money under transaction motive increases. Once again, what is transaction motive? What is demand for money? Demand for money is amount of money people keep with them in the form of money itself. Why do people keep money in the form of money? Why are they keeping notes and coins? One is the transaction motive for day-to-day transactions, no? Because income is coming on one day of the month. Expenses are happening every day. So you have to keep some money then. So because of that, you keep some. That's a transaction motive. Then the demand for money under the transaction motive depends on what? Depends on a person's income. When your income is low, demand for money is low. You are earning more and more means in your purse you will have more and more. Have you all realized sometimes in your father's purse there is 5,000, 5,000 of money? In your purse there are 20 rupee note. Father's purse has 5,000, 5,000. Your purse has 20 rupee, 50 rupee and 100 rupee. What? How come you're demanding low money and your father's demanding for more money? Because his income is high. No, you don't have any income. No? It depends on what? Depends on your income. So according to the graph here, people tend to increase the demand for money when their income increases. And they intend to decrease the demand for money when their income decreases. Lamai, demand for money under the transaction motive, does it only depend on your income? It only depend on your income. There can be some other factors. Shall I give a good example in Sri Lanka? Don't you think the price level, or in other words, inflation has affected this? Now, just think, before this economic crisis of COVID, how much of money your mother gave pocket money to go to school and how much of money they are giving you now? Has it changed? Or are they giving you the same? Think around 2-3 years ago how much they gave you and now how much they are giving you when you're going to school. Definitely would have increased, right? Don't you think? Earlier when you're going to school, okay, now I remember earlier Lamai, when I went to university, at university our plane tea is 5 rupees. Rice is, you can buy lunch for 40 rupees, or yeah, breakfast rice is 30 rupees, lunch you can buy for 50. So I can go, my bus fare was 20 rupees. I remember from Mount Lane and Bumblebee, no, to uni near this thing, it was 20 rupees. So, to go and come 20 and 20, 40 rupees. lunch is around 50 rupees, a tea or something 5 rupees. With 100 rupees, I can go one day for Union Cup. I can manage. But now I'm thinking if I just have to go to uni now, even for bus, right? Even if I'm not going to uni now, but I'm just thinking now the bus fare just to go one way is 60 rupees. So going and coming 60, 60, 120. Now lunch 50 rupees sold at lunch fare. Now that lunch is 200. Okay. And now the plain tea that was 5 rupees, plain tea is around 20 rupees or 25 rupees. Okay. So now earlier I demanded only for 100 rupees if I went to university. But now because the price level, now because there has been inflation in the country, now I will have to at least keep 500 rupees in my purse if I need to go to university. So demand for money doesn't only come, main determinant is income. More income, you will demand for more money for your transactions. But that is not the only determinant. Apart from that, the prices will affect, and even this lamai. So price part is clear neither. When the prices increase, people will demand for more money. Earlier, you only had 100 rupees in your purse. Your demand for money only 100 rupees. Now you're demanding 500 rupees. Why now? Because prices are expensive now. Now, if you take 100 rupees and go, you have to walk only and go to university. No? And what about this, Lamai? Innovations in the monetary market is earlier. I want you all to practically think and tell me. Okay. Now, Lamai, there are debit cards and credit cards. No, there are debit and credit cards. What do you think happened to the demand for money because of debit cards and compared to before? Compared to, let's say, 20 years ago, what do you think would have happened to the demand for money because of debit cards? Demand for money is money that people keep with them in the form of money. Now, let's say 15 years, okay, 10 years ago, if your father gets his salary, where does he keep his salary? Where will he keep 10 years ago? If he gets his salary, he will keep maybe in his Almara, right? Or maybe they say before these banks and all, 10, 15 years ago, in his Almara, he will keep the money. Some of it he will keep in his purse, no? So then demand for money was all of it, keeping money in the form of money. But now does he keep the money in the Almera? Now with innovations in the financial system, online banking, debit cards, now what has happened to the demand for money? Now are people keeping money in the form of money? Now sometimes if you open my purse and see, in my purse I don't have a single rupee. But still I can survive the day because I have what? I have my debit card. If I buy something, I go to Cargill's, I pay by card. I go to a bakery, I pay by card. I go to buy lunch, I pay by card. I order lunch from Uber, I pay by card. So what has happened now? With the innovations coming, with new digital banking, online banking, debit card, credit card, ever easy cash, what has happened? The demand for money has come. So remember, so few things to remember now. You can make a side note. When income increases, demand for money on the transaction motive increases. When price level increases, demand for money increases. People keep more money with them. Earlier, I took only 100 rupees for university. Now I have to take, let's say, 500. Then, when there are innovations, I'll just say innovations, demand for money comes down. Debit card, online banking, and when those type of innovations come, now people are not keeping money with them, no? In my purse, sometimes if you open my purse now and see, there will be a 20 rupee note. That's it. Because I know even if I go out, no problem, I have my card. I can pay by card, no issue. So demand for money has come. So likewise, there are some other factors as well. But remember, what is the main factor? Main factor is income. Is that okay? Transaction motive. What is transaction motive? The money that people keep with them for their day-to-day transactions. What does it depend on? It depends on their income. More income and the more money they keep with them for their day-to-day transactions. Not only income, some other factors are there like prices, financial innovation. Those are also other factors that affect. That is one reason that people keep money with them. The second reason that people keep money with them, Lamai, is the precautionary motive. I'll give you a good example. How many of y'all in your purse have hid some money and kept? Not in the main pocket in your purse, but the asaka, have you all put some money and kept? Or in your phone back cover, have you all put some money and kept? Yes. Inside your purse, you put the hide and keep, or maybe in your cupboard also. In your cupboard, and do you all have? I don't know if you all have. I don't know if it's the trend now. In your cupboard, do you all have a piece of paper and then kept the clothes? Yes. How is your clothes? I know that is how it's there in our house. We have a piece of paper in the cupboard. On top of that, the clothes are there. Clothes are not in the wood piece. Under that piece of paper, have you all kept some money? Yes. No. Under that piece of paper in your cupboard, or maybe on the side inside your purse, in a not the main pocket, side pocket, or maybe in your back cover. What is that money? That money is for what? Is that the money that you are spending daily for your transaction? What is that money? That is for emergency, Remember, your mother also gives you some money and keep in case you in case it rains, come by 3 wheel. Do you all get that money now? Now earlier I go by bus only. Your mother says, in case something happens, take a 3 wheel and come. Keep this money for that. Does that happen now? No. Is that out of the option now? Or all of you all already go by 3 wheel? I went by bus only. If uni also I went by bus. Still also work also. Some days I go by bus. Sometimes I take a do. So you keep some money for what? For emergency. Now, so even if you take a family lamai, they will keep some money with them in your Almera. Maybe what if you fall sick? What if your vehicle meets with an accident? Who knows? So you will keep money not for your day-to-day transaction. You will keep money for precautionary purposes in case of any unexpected situation happen. That's another reason that people demand for money. Try to understand what is demand for money. Keeping money in the form of cash itself. What is the first reason? Why do people keep money in the form of cash? For their day-to-day transaction. That's the first one. For day-to-day transactions, you need money, so they keep money. Second reason is no emergency. So that is the money. Remember, you hide in your purse and keep in your back cover or under that colacalla in your almera. That is the precautionary motive money. Then now, what do you think this money depends on? Think of a very poor household, Lamai. Will they have much money for precaution? Do you think they have money kept in their almera? If this happens, we will use this. No. What about a rich family? Rich family earning, let's say, 1 million a month. Those fellows would have a lot of money, right? In their almera, in their this thing, they have lot. So demand for money under the precautionary motive also depends on what? Depends on income. Depends on income. What type of relationship? Again, positive relationship. So a very poor family earning only 10,000 a month, sometimes they might not even have money for precaution. No, මොන precaution ද වෙන්නේ? But බඩු ටික ගන්නවත් සල්ලි නෑ, no? You don't even have money to buy your normal goods. What money for precaution, no? So if you're earning like 10,000 a month, you might have, let's say, 100 rupees for precaution. Let's say a family earning 500,000 a month. Those people have set aside and kept if you fall sick, if our vehicle gets accident, they have kept aside 100,000 and kept for precaution. So more income, more money you will keep for your precautionary mode. More income, more money you keep for your precautionary. So both of these somewhat similar, no? Transaction motive is the money you keep with you for your day-to-day transaction. Higher the income, more money you keep. What is precautionary motive? Money that you keep with you for what reason? Money that you keep with you for emergency situation. That also, if you have more income, you will keep more money. Positive relationship between income and demand for money. Is that okay, guys? The two first reasons: transaction motive, precautionary motive. Shape. Yes. Current tax. Yes, current tax can reduce the demand for money. Correct. We'll talk about unit number 8. Very interesting. We'll talk about tax. Then the last one. Now this one is a product little difficult than the other ones. Okay. The speculative demand. Product difficult, but listen carefully. I know you all are tired. I'm also tired. That's okay. Right? We'll listen very carefully, and with this the unit is done. Supply of money, I'm not starting this part today. Okay. Demand for money, and then we're done. I will anyway revise demand for money next week also, but listen very carefully now. Okay. Right. Yes. Demand for money under the speculative motive. Under the speculative motive is, this is the money that we keep with us for what purpose? The money that we keep with us for investing purposes. Money that we keep with us for investing purposes. I will now explain. I want you to logically understand how this works. Okay. I am giving a simplified explanation compared to the real world, but I want you all to listen. Yes. Okay. Let's say you have some money with you. Let's say now you all have let's say 100,000 money you have saved and kept in your Almera. In your till you have 100,000. You can put your money in a bank account. You can put your money in a bank account. Bank account will pay interest. Right? Bank account will pay interest. Or else you can, let's say, buy, let's say, a treasury bill. Right? You can buy like a treasury bill or let's say a treasury bond. This one, no interest. Right? This one doesn't pay interest. Okay. Now I want you to think like an investor. Okay, we'll see if you all can practically figure this out. Let's say Lamai, in the market, interest rates increase. Where will you put your money? Interest rates increase. Will you put it in the bank account that is paying interest, or do you buy a treasury bill or bond? Now interest rate is high. Government is saying, bank is saying, under comment, put the money with me. I will give you 20% interest. Where do you put it? Where do you put your money? You put your money in the bank account, right? You put your money in the bank account. So what happens to, okay, what happens to the demand, right? Now this bank account part I just gave you all to understand. What do you think when interest rates increase, what happens to the demand for treasury bills and bonds? We'll say treasury bonds. What happens to the demand for this number? Does anyone like to buy treasury bonds now? And the interest rates are high, everyone is putting the money in the bank. Is anyone demanding treasury bonds? No, right? Demand for treasury bonds come down. Yes. Then think and tell me, now use a little bit of unit number 2 knowledge, basics. If the demand, now let's say this is the price. Okay, now price of treasury bond, let's say 100 rupees. Let's say if the demand for a product comes down, right? Remember unit number 2 we have learned. What happens to the price for the product? If the demand for treasury bonds come down, what will happen? Demand comes down. Look at the diagram at least and tell me. If the demand comes down, now how much is the equilibrium price? Come down, right? If the demand comes down, if no one likes that product, what will happen? Price will come down. So when the demand for bonds come down, what happens? The price of bonds come down. Okay. price of bonds decrease. So this lamai, this is a bit of a finance concept. We at our level we have not learned it. There is a negative relationship between interest rate and price of bonds. When interest rate increase, prices of bonds will come down. I just gave you a story to explain how. So I told you when interest rates go up, people might put their money in their bank account. They won't buy treasury bills or bonds. Demand for treasury bills and bonds come down. Then price comes. Lamai then think, if you are an investor, okay, how do you buy shares and bonds and all? How do you make a profit, Lamai? Think of shares or whatever. How do you make a profit out of shares? How do you do it? You buy at a, okay, dividends are there. How do you make like capital gain? You buy at a higher amount and sell it at a lesser, or how do you do it? How do you buy? What is the logic of an investor? When the price is low, you buy. When the price is low, you buy. When the price goes up, you sell. At the low price, you buy. When the price goes up, you sell. You buy it for 50 rupees, sell it for 70 rupees. That's how it works. That's how share market and everything works. So then, I told you a Bitcoin example. You buy the Bitcoin at 15,000, sell at 45,000, getting a profit. So Lamai, then tell me, when the price of bonds go down, what will investors do now? Will they buy bonds or will they sell bonds? What will they do? Now bonds are cheap. And the bonds, better. I said demand for this bank account mortgage, you can leave it there. Just that's a normal example I just gave. What will people do? People will buy bonds. Right. So people are buying bonds means what is happening? Let's say I had 200,000 money with me in my purse. Now I bought a bond. How much of money will I have now? I will have less, right? I had 200,000 in my purse. I saw a nice opportunity. Bonds are cheap. What did I do? I soon went and bought a bond. So then, when people buy bonds, what happens to the demand for money, Lama? Demand for money? Demand for money is how much of money you have with you, in the form of cash. If you buy the bond, what happens to the money that you have with you? You don't have money with you, you bought the bond. Demand for money increases or decreases? Demand for money decrease. It's a bit of a complex area. I will go through it again. Don't worry that. I know half of y'all didn't get it. I know first time when I learned this also, I didn't get it. So I will teach you the other side of it. Quickly, we'll go through the other side. Okay. Don't worry. I will recap it tech class also. Okay. Now, yes. Okay. Now we'll forget about the bank account part. Yes. If the interest rates come down, yeah, remember interest rates and price of bonds, negative relation. How does that work, Lama? That is a finance concept. In our level, we don't want. You will learn it at a university. Okay. So when interest rates go down, can you tell me what happens to the price of bonds? When interest rates go down, price of bonds? Always remember negative relationship. Interest rates go down, price of bonds increase. When the price of bonds increase, what do people do? Do they buy do they sell them? What do you do now? And if you have bonds now, and you sell. Now bond is high now. You would have had some bonds that you bought and kept before. What do people do? People sell bonds. A good opportunity bonds වැඩි Now let's sell our bonds. They will sell bonds. When they sell bonds, what happens? They are getting money now, right? They are selling their bonds. So what happens? The demand for money, amount of money that they have in their purse or almirah or at home, demand for money after they sold their bonds, demand for money and demand for money increases. Got it? When interest rates come down, demand for money, speculative motive goes up. Same thing opposite. Now we'll go through the opposite again without talking about the bank account. When interest rate increase, tell me what happens to price of bonds? When interest rates increase, price of bonds decrease. Negative relationship. When price of bonds decrease, what do people do? Do you buy the sell them? As an investor, bonds la buy them. It's very cheap. What do? You buy the bond. When you buy bonds, what happens to the money that you have now? You took your money and you bought the bond. Now do you have money with you? No money. So your demand for money has increased. Demand for money comes down. See, interest rates go up, demand for money comes down. Negative relation. Interest rates go down, demand for money. So shall I show you the graph there? You can take a screenshot Lama if you all want. Let me have my camera off. Otherwise, my picture is also there. I'll turn it this side. If you want, you can just take a screenshot. Just take and keep this. Demand for money goes down means because you're buying the bond. No? When you buy the bond, you're giving money, right? You don't just get something. No? You whatever money you have, you give when you buy the bond. So now you don't have money with you. That's why your demand for money is gone down. Demand for money is how much of money you have with you in the form of cash. The moment you buy a bond, now you don't have money with you. Okay? Right. Coming back to this case, here see, demand for money. I'll quickly go through. Okay? Demand for money to gain future benefits by investing on bonds is called demand for money on the speculative mode. The money that you keep with you for investing purposes. And that is only speculative mode. So then we also call this demand for money as an asset. Demand for money demand for an asset. That is a speculative motive too. So what type of relationship there is? There is a negative relationship between demand for money under the speculative motive and interest rate. Look at the diagram, look at the graph. When the interest rates are low, this axis is interest rate. Let's say interest rate is 2%. When interest rates are low and the demand for money speculative motive is high. So when interest rates are low, what happens? Connect with price of bonds and see what we wrote. Then when interest rates are high, let's say interest rate is 20%. So when interest rates are high, demand for money is low. Correct. So negative relationship between what? Interest rates and demand for money under the speculative mode. What I explained is what is there in the Tiyut Lamai. Word by word, you can read. I'm not going to read word by word. You can you all, hopefully you all will get the Tiyut before the next class. I have couriered 100 Tiyuts today. Hopefully the ones who pay and register in the next few days, I'll be putting your Tiyuts also. So by next Wednesday, most of you all will have the printed Tiyut with you. You can have a print. So next class, I will give you a summary on speculative motive and I will start. So far, what did we do? We are done with, if you look at the overall unit, we are done with the basics. We are done with demand for money. So we have supply of money, then money is done. Ita passe, we have inflation. Okay. I'll see if I can share this tune that I have scribbled also. So with that, Lama, we can call it a day. There is a quiz. Do you want to do it today or do we do it next week? What do you all want to do? Since it's 9/7. We can do it today or we can do it next week. Today? Right. Okay. So majority says today. We'll do it. We'll see how many of you all will listen. Give me a second. So guys, I think this quiz, I've only made it for 40 participants. I completely forgot that it was a free class. The first 40 can join online. The remaining Lama, you all can maybe even if you are unable to join, if the limit gets filled, you can join through the Zoom chat. You can send the answer through the Zoom chat. It's a fun quiz, guys. All of you all can participate. Give me a second until I load this. Right. So we'll see how many of you all were listening. Yes, revision class, I will be changing time. I forgot to put, I wanted to put a this thing. I'll have my camera off. This is loading a little slow. Okay. Revision class, I will change the time a little. I will keep you all informed now. Okay. Right. So it's a fun piece, guys. Even if you all don't play, at least I think participants what it should be now. The quiz is loading. I will show you all how to play. Okay. So for the people who are joining for the very first time, usually in my theory class, at the end of every class, we have a small quiz from what we learned that day. So for the people who are joining for the very first time, you can click on the link that is there on the chat box. You can use a phone, laptop, anything is possible. You can click on the link. They will ask you for your name. You enter your name and join. If not, you can go to this website without clicking on the link. Go to this website www.kahoot.it. KAHOOT.it. They'll ask you for a game pin. So you can enter this number that is on the screen, 810-8924. I'll send it on the chat box as well, 810-8924. And then they'll ask you for your name, enter your name and you can join. So once you join, your name will be there on my screen. You can minimize the Zoom and go. You don't have to be on Zoom. Don't leave the Zoom meeting. Just minimize the Zoom and you can go on your phone or laptop or whatever. Go to your web browser and go. So there are 30 people who have joined for now. I think my limit is 40. The first 40 people can be on this. Others, if you all get late to join, on the Zoom chat box, you can send me the answer. I'll wait for another minute or two in case it reaches 40. Right. Okay. So I'll start, guys. Even in the middle, you all can join. Okay. So even in the middle, I have not locking the quiz. Even in the middle, you can click on this link or enter the code and you can join. Okay. We'll start. The faster you answer, more points you get. Okay. It's 10 MCQs. Very easy one. Each quiz is with this. Okay. Which of the following is not a characteristic of good money? Not. Durability, divisibility, portability, inflationary. Not a characteristic of good money. It's the very first thing that we learn to do. Not. Faster you answer, more points you get. No. Wow. Okay. Everyone got it correct. Nice. Inflation. You know, that's not a characteristic. No. All the others were characteristics. Okay, so we look at the leaderboard. Right, we have Rima on top, Sachitra, Ashwa, Sara, and Vincent. Remember, the faster you answer, more points you get. Huh? Each question you get 1,000 points. More faster you answer, more points you get. Right. Near money refers to what? Currency and coins in circulation, demand deposits held in commercial banks, liquid assets which act as a store of value but not medium of exchange, long-term bonds and securities. Near money. What is the most correct one? Nice. So those are the liquid assets. Remember, like your savings deposits, fixed deposits, those kind of things. Oh, wow, we have a boy on top. Very, very rare sight on one of my classes. No? Let's go to the next. Okay. Transaction motive, money demand primarily depends on interest rate, inflation rate, income, tax. Transaction motive, money demand primarily depends on what? Easy one. No. Depends on your income level. No? Remember, transaction and precautionary both were on income. None of you all are getting it correct. A very close leaderboard though. Going to the next. Which function of money ensures that prices of goods and services can be easily compared? Medium of exchange, store of value, unit of account, standard of deferred payment. Which function ensures that prices can be easily compared? Which function? More like the unit of account, right? Because the unit account, you can see, iPhone is 300 rupees, Samsung, let's say, is 250,000. You can compare. Okay, leaderboard still looks like the same. Small people climbing up. Nice, I see my name also on this. Right. Credit and debit cards are classified as currency, bank money, near money, money substitute. Come on, one of the easiest questions I would say. Credit and debit cards are classified as monad. As money substitutes. So remember, under money substitutes, we learned there are two: credit and debit card. Okay, leaderboard looks very strong. First place is still there on top. Next one. Which of the following is not a reason why people demand for money? Not a reason. Transaction motive, emotional motive, speculative motive, precautionary. Again, if you are listening, you can get it right. Not a reason. Now, there is nothing called emotional motive. No nonsense. Don't come up with new name. That is not the reason. Really, the board looks still very, very thing. Nothing is changing. Which of the following is an example for niyam? Treasury bills, gold bar, real estate, demand deposit. Example for niyam. Which one? Next, that is treasury bill. Then the next one. Oh, right. Leaderboard has changed. Where did the top person? Okay, one person, everything goes wrong. The top person is there, no? And okay. The transaction demand for money is related to savings for future emergencies, speculating on future interest rate, conducting day-to-day transactions, protecting against inflation. Transaction demand for money. Yes, others, if you're not in the quiz, you can at least send a message on chat box. No problem. for your day-to-day transactions. Perfect. Okay, so we have new people on top. Right, very high competition. Last two questions. What issue was resolved by money serving as a medium of exchange? Limitations of production, inefficiencies of the barter system, risk of investment, currency devaluation due to inflation. Because of money coming in as the medium of exchange, which problem was resolved? Now, the inefficiencies in the barter system. Remember, we talked about this at the very beginning. Right. That question had double the points, Lamai. So your points would have doubled. Last question is also on double points, most likely. We'll see how it goes. Which function of money helps firms to hold on to purchasing power over time and settle past debts in a future date? Medium of exchange, unit of account, store of value, standard of deferred payment. Right. That's the last question that we have. Next week, there will be a quiz from this week's part and next week's part. So study and come. Nice. That is standard of deferred payment. Right. So we look at the leaderboard. For some reason, my Kahoot animations don't work now. Right. We look at the leaderboard, we'll see. Oh, right. So we have Zainab on top, Hafsa in second, then we have Pulindo in third. Nice to see guys show up and compete. My 2023 batch, the guys are actually really good. The guys are the ones who get the highest marks in the mock papers. 2024 batch is the complete opposite. It's always the girls that dominate. Nice to see some guys also show up. Good that you give some competition. So congratulations, winners, guys. You can drop me a text. This week's reload will be a little high. So the winner gets a 300, second place gets a 200, third place gets a reload of 100. Drop me a text with your name and contact number and your place. So say, sir, I am, let's say Zainab, this is my number. I was first, because I will be forwarding that message to the admin. Admin will send the reload, because I don't send it one by one. So type your contact number itself and send. Okay. So with that, we'll call it a day, Lama. It was a long class from 7 all the way until around 10, 20. Now I have a few sessions with my tomorrow's A-level batch. I have some doubts for them to clear. Next class, guys, theory class will be next Wednesday. Revision will be on revision on Monday. I might change the time. I'll inform you all on the group. So with that, we'll call it a day. Stick to your study plan. Get things done. Yes, 3 hours. See you all and have a nice day. If there are questions, do stay and clarify. See you. Bye-bye.